Welcome, Susan. So good to speak to you. One of the bonuses that have come out of this crisis is an incredible increase in value of our human connections, I'm sure.
Yes, indeed.
And I do appreciate you. I was wondering if you could tell me a little bit about what you like to invest in.
Sure. At Aligned Partners, we invest in enterprise-focused startups. We don't invest in seed. We do invest in early stage, but our companies typically have initial revenue traction to validate customer adoption. And our companies tend to be capital efficient, meaning that they'll use less than 15 million in total equity to achieve profitability and exit. Some of our companies have used as little as 2.5 million total, and others have used the full 15. So it ranges between there. We are not focused on any particular vertical market, so we are more agnostic with regard to vertical markets. That would include fintech is a oftentimes favorite for us, but we also have marketing IT, healthcare IT, legal IT. So we have a number of different segments that we have had very successful companies grow and expand within.
Fabulous. And so how are you managing your current portfolio with the crisis?
Well, in February, when we had some visibility into what was happening in China and then the jump to Europe, we immediately pushed our companies into Plan B operating plans to preserve capital. So they cut their burn rate pretty quickly. They streamlined. There were salary cuts. They renegotiated leases with their landlords. They basically removed any of the ancillary items that were nice to haves, but not must haves for the company's survival. And that made all the difference in the world because they reacted very fast. They also reached out to their customers to let their customers know that they were in fine shape. They had plenty of capital. They were actually funded. Most of our companies are funded to profitability, and that they would be there with the customers in the long term. And that's important because I think in a downturn like this, there are a lot of companies, startups in particular, that will fail. And the customers are going to be hit hard because they took a risk on that startup. And so it's really important that startups let their customers know that they're going to be there for the long haul. Then the second element, of course, is your employees and making sure your employees are taken care of and ensuring not only their health, but that psychologically that they're ready for the work from home that ultimately happened. Most of our companies were quite fine shifting to work from home. In fact, what we've discovered is that productivity is high, and the employees are very much enjoying it because they don't have that 45-minute to an hour commute each way. Yeah. So they're actually it's ending up working out better, and we have a number of leases coming up for renewals at a group of our companies, and they're actually debating whether to get office space again or to just try the work from home for a year and see how it goes. And if it does well, then they'll continue. So interesting changes underway in kind of the capital market. And our companies responded well. So all of our companies will make it through this downturn. They have at least 18 months runway or cash to profitability. We did have them on the revenue plan. Anticipate that second quarter, we asked them to do a kind of what we would call a worst case analysis, which was assume second quarter had zero revenues. Third quarter, you saw 25% of your plan of what you had thought you were going to do in 2020. Yeah. And then your fourth quarter is maybe about 45%. And figure out how to make the cash last at least 18 months or to profitability under a dramatically reduced revenue plan. And that has worked out well. It's given them flexibility for, some customers that are under duress have asked for, we don't want to pay a year up front because we're trying to preserve cash. We want to pay quarterly. And that gives our startups the flexibility to say, yeah, we can do that. We'll work with you. Because those customers will remember the startups that worked with them.
Yeah. Wow, you're such a forward thinker, Susan. You always amaze me. Because I have to say, I'm going to put my hand up. This like totally took me by surprise, and I was madly trying to put a panel together in San Francisco, and got it to the point where it was just going to be the panel, and we were going to live stream it at Capgemini, and then everything happened, and then the shelter in place came into effect in March, and it was like it was all over.
Well, it was much more dramatic than I had ever anticipated, because I really thought, well, consumers would lose confidence in spending because of the illness. Therefore, the economy was going to go down. Never in my wildest dreams did I think we would be under going on 8-week lockup.
Oh, okay. But still, what you did with your portfolio companies, that was amazing, and so ahead of the game, I would say. And so hopefully their customers and them will survive much better. Are you still looking at other investments, or how are you managing that?
Yes, we are active. So there's two groups. I would put the potential investments in two groups. Okay. One are those investments, those companies that we had been considering before. And these might have been earlier stage than we would normally go in, and we've just kept touch with them. And so we are retouching them to say, how are things going? Have you progressed to the point where we're interested? Because we'll have met with those entrepreneurs and those teams previously. And so we have a good feel for the company and the opportunity. So that's one kind of bucket of investment opportunities that we're looking at pretty seriously. And then the second bucket of opportunities are those entrepreneurs that we've not met except over video conferencing. And so that's going to take longer, because it is difficult for us to do an investment without actually meeting the team and doing some whiteboarding and just being in the room with the team to see the unspoken dynamics.
Yeah.
And so that will be hard for us. If this can, let's hope, knock on wood here, that we're not going to be in this lockdown for much longer. We'll start to meet selectively with folks, but we won't be very active in that. And so those companies will have to really rise above our hurdle to get our attention and to make us want to do that.
Right.
But that's not to say that we wouldn't.
Yeah, no problems. And on an overall sort of general level, how do you see the next couple of years? I mean, I know it's very hard to predict for any of us because, on many levels, this has all taken us all by surprise. But what are your thoughts? You've obviously are a person that prepares ahead of time, which is great. So how do you think it's going to look like in the next 12 months, next 24 months?
So for the startups, I think there's a plus and minus.
Okay.
The plus is for those startups that can come through this downturn and prove that they are of significant value to their customer base, because that's the only reason customers are going to spend money on their products or services. Those companies will be very valuable.
Okay.
I think the companies that had a vitamin or had a style or a trend but not a need, those companies will be very challenged. And so I think for those startups that can prove their significant value to the customer base, that will make them valuable, and they will be sought after for both investment as well as M&A. So that would be the positive side.
Yeah.
And the other positives are, salaries are going down. The competition is decreasing in the valley, so you'll be able to hire really high quality talent at very reasonable prices. If you have a company that is one of those highly valued companies by the customers, you are a safe haven for employees. So you will get first dibs on high quality employees. I think leases and subleases are definitely becoming available because startups are getting shut down left and right. In fact, Marty Pitchinson, who lovingly is described as the undertaker of Silicon Valley. He goes in and shuts down companies, essentially. He told me that before this happened, kind of in the January, February timeframe, he was probably shutting down maybe 4 companies a week. He's doing now between 5 and 6 companies a day. So that is a lot of fallout.
Wow, yeah.
And but those leases will become available as subleases, or those landlords are going to be looking for new renters at a much better pricing. Yeah. I think the fact that work from home is working for a number of companies is going to put more pressure and will reduce leases even more. Yeah. So there are cost advantages that startups are going to see. I think the negatives are, the bubbly momentum times of easy money is gone for now. We have our cycles, right? We have our cycles. Yeah. And so you're really going to have to prove your wealth and your worth and your mettle. Really prove why should your startup exist in this environment.
So really what I'm hearing is that it's very grounding, this whole experience, because things did get a little bit inflated and a bit out of control here in the Valley.
Yes, very grounding. Like that.
Yeah, and now from what you're saying, I'm thinking, well, that's all good, really good stuff, and brings us back down to earth and makes the companies more real and, as you said, providing real value. So
I think so. I mean, that would be my take on it. I know there's a lot of pain. I am empathetic with the pain.
Yeah, of course.
But I think ultimately it makes us stronger as entrepreneurs and investors.
Yes. And so on that point, which is obviously brings me to my tipping point, I really am interested in the whole human factor here, because this isn't just a business finance crisis like we've had in years gone past. We're all self-isolated. And I'm wondering what your take is on this, of how that's going to affect our, us working in the startup ecosystem here in Silicon Valley. And, for me, obviously, it's created a very high value and significant value on my my connections with others, and made me more aware of that. But that's always been a strong point for me. So I'm just wondering how you see this could affect us all generally.
Pimo, you do an excellent job of being on that forefront of new thinking and really bringing
often alone.
So I applaud you for doing that and
you're so good
broadly and having such an excellent group of connections and your access. So you've done a great job.
Thank you.
So yes, I talk to my CEOs a lot more. I probably talk to them at least a couple times a week, each one, just to check in. Because when we first had this kind of tidal wave come over us, you have to reach out and say, hey, I know you're scared. I know you're scared for your company, for your employees, for your customers. And so let's just talk it through and make sure that we understand the proactive things we're going to do to survive and then thrive. So that was that proactive reach out by my partner and I was very important. And it set the stage, I think, for them to be open and honest. The other aspect is to coach them on how to help their employees through this. Employees are feeling isolated. They're feeling vulnerable. They don't have their cohorts with them, particularly if they're the younger, stuck at home alone. That can be very isolating. So having team conferences, not just once a day, but multiple times a day, just to check in, making sure that people are responsible for each other, just as the company's family. Check in, have lunches together, schedule once a week. Everybody's on the video with lunch and chit-chatting, not talking about work. So I think those are things that can be done to help. Now, the go back to work aspect, because we do have, particularly the younger employees, want to go someplace and be with others.
Yes.
And so our companies have made it completely voluntary as to when they feel comfortable doing that. They are going to alternate days so that they can enforce the distancing aspect and have masks. And then other employees that don't want to do that, as long as their productivity doesn't decline or isn't severely impacted, then, our attitude is they should work from home as long as they want. Right. So I think that flexibility is important. And I think you're seeing that in the ecosystem in general is people are being very flexible. The question is, when we reopen, will we have those? Well, we're certainly not going to have large gatherings until probably next year. And so you will see more small groups, which in many ways, I think small groups together are more willing to share their vulnerabilities and advice across each other. And so I would envision that this is an opportunity for, the small breakfast group to get together, the small coffee group to get together, as opposed to these, 200-person conferences, unless you're going to do that over video.
So possibly deeper engagement then? I
think so. I would hope so, because there is an opportunity for that. And,
Right.
You on the vanguard here would be the perfect, example to lead us off in that direction.
Yeah. Definitely we'll do the litmus test. So what do you think the new normal is going to look like? I know it's really hard to predict, but everyone's got a different opinion about whether things will ultimately go back to the way they were, or whether there will be a new normal and we'll have to adjust to that.
So yeah, my crystal ball is not working today, but so I guess I can speak. Well, from my personal view is
yes.
I will reduce travel until I feel very comfortable with the close engagement. I think the latest pictures coming on the cheek to jowl kind of crowding on airplanes gave me a bit of the and so that's certainly one effect for me. I think companies, their customers actually are not necessarily going to want them coming to see them. So I think you will have to be very creative about how you establish rapport and relationship with your customers, because the closer contact, we'll come in and do a strategy meeting with you or something. I'm not sure customers are going to be comfortable with outsiders coming in for a while. And so that's going to put a lot of onus on how do you establish and build a relationship of trust with your customers. So that's something that we've been working on as well. So yeah, many challenges
yes.
and no shortage of challenges, but that's why we have creative people to help us.
And Silicon Valley, I mean, that's what we should be all about. But so I guess it's just again another litmus test to see if people can really do that. So
yeah, I wouldn't be surprised if we go into a W recovery, where we get out of lockup, everybody goes back to work, and we start coming out, and then we get hit with a second wave of infection, and then we go back down again. But this time, I think it should not be nearly as much of a shock. It's like, okay, we're going back into lockdown. We know how to do this, and so I think folks will be more battle hardened to do that. I do worry about our small businesses, our lovely small business owners, restaurants, salons, etc. that are really taking it hard right now, and so that does worry me that we will lose a set of entrepreneurs, small business owners, that it's going to be hard to get them through this, and so that's going to be too bad.
That's definitely about our community, isn't it? The
Yes.
changes that are going to happen that we can't really envision just yet, but yeah, definitely. Yeah. Susan, it's always a delight talking to you, and really have learnt a lot. Appreciate it, and wishing you all the best and all your portfolio companies, and hopefully we'll circle back and check out where we are a bit further down the line.
You bet. Pimo, if there's anything you need, you just let me know, okay?
And you're wonderful.
Great work.
Thank you so much again.
Okay.
See ya.
Thanks, Pimo.
Bye. Bye-bye.